All right. So what we're looking at here, Zoran's going to share his screen. One thing that I do want to ask you that I've seen you say a lot is that you only trade on BitMEX. Is that right?
That is correct. And that's because I have yet to find an exchange that can sufficiently provide me the liquidity I need at this stage in the game.
Yeah, 100%. Now we've got our Ichimoku here up on the screen. We've got our volume bars down at the bottom there. So a pretty sort of simple setup at this point. Now, the biggest thing that I want to ask you is there's a lot of different thoughts out there on settings, whether we have the standard settings that account for a Forex market, a closed regulated market, the 926s, and then we've got our 2061, 2030 crypto settings. Now, I think you use the crypto settings. Is that correct?
I do. So the crypto settings are technically 10, 30, 60, 30, just to account for 365 trading days. The more popular settings nowadays these aren't my settings. I actually got them from Carpe Noctem, who was also a mentor or mentee under Chaos Trader. And he has a really good YouTube video actually explaining the reasoning. And it made sense after a bunch of back tests. 2061, 2030, that's basically doubling the first three inputs on Ichimoku. And the reason we double any sort of indicator is to smooth it out. So when you smooth out an indicator, what does that do? Well, technically, if we're actually talking technicalities, if I overlay the 2061, 2030 on the daily chart, what I'm actually looking at is the daily price action overlaid on a 2-day cloud. So if you think about it, right, I'm looking at, this is actually the 2-day cloud. So if you did 10, 30, 60, 30, you would see this cloud on the 2-day. But we're doing it on the 1-day. So we get to see 1-day price action on a 2-day cloud. What does that give you? Well, in theory, it should give you smoother signals, meaning there's less false positives. You know, there could be a 10, 30, 60 breakout that looks great, and all of a sudden it pulls back and stops you out. Well, why? What happened? It could just be the market, but it could be a false positive. So by doubling the settings, you're smoothing out the indicator, creating less false positives, and forcing you to be more selective with your capital. That goes back to the whole patience thing, right? In trading, we only want to take the most perfect setups. And by doing so, we allow ourselves a higher probability of success. So I always do 2061, 2030. I've been doing it for 2-3 years now. It's really helped me immensely, especially with targets, because when you see 2-day cloud on 1-day price action, you all of a sudden start seeing very nice resistances where price might stop. And that was the same thought process. Actually, if we go back on the 2-day, I was actually looking at the 4-day cloud on Ethereum, right? So when you look at a doubled Ichimoku style, you see targets that might be weeks away. And that's how you account for trade duration. So I guess if you want to talk about Ethereum on the daily, and we're looking at doubled settings, what do we have here? I think this is the most textbook setup of a Kumo breakout that you can get in terms of what a cryptocurrency asset might provide in terms of going long or short. So a traditional Kumo breakout has a little checklist that goes by, is price above the cloud? Is it above the Kijun, which is known as the baseline? And is Chiku span above price? Yes. And now the last thing you need is a bullish or bearish Kumo twist. Here we see we're about to get that, right? I have a nice indicator by Ali. She's actually one of our members in Crypto Insiders. She created an Ichimoku forecaster, which I've actually found invaluable in the last 1.5 years. It projects where the Tenkin and the Kijun are going to be the following 5 periods based on the swing high and low points. And it actually tells you at what price does that Tenkin or Kijun move if price violates a swing high or swing low.
I'd always wondered what that was, and I tried to look for that setting with the dots there. I thought that was just the end of the Kijun or the Tenkin, just sort of dotted out. But that's really interesting. Credit to Ali for creating that. That's awesome.
It's been invaluable because knowing where price or where Tenkin and Kijun are going to go kind of give you a foreshadowed signal. So we don't have the twist yet. So a traditional Kumo breakout would say you wait for the actual twist as confirmation before getting long. But I'm sure if I remember seeing this morning, I didn't take it, but if you replayed this on the daily,
Can I just ask as well for the people who I'm sure who are going to ask, is that a publicly available, or is that something that's only available to?
Yeah, it's a publicly available tool. If you put it on TradingView, I think if you just type in Ali Ichimoku, it's the first thing that comes up. It's awesome. It's open source. Go nuts with it.
That's awesome, man. Good
And
credit to Ali.
if we played through on the daily here, I'll probably pause it in just a second. Oh, maybe not. But point being was this little wick down here. So on a technical Kumo breakout, you want to get long on an SR flip of the flat top or bottom. So after price broke out here, we wouldn't have gotten in here, first of all. And the reason being is because we didn't have our bullish twist that was coming. So this would have been a false positive. You would have said, oh, great, price is outside the cloud, let's go long. Well, you have to kind of be selective. So waiting for price to pull back, bounce off the Tenkin, and then break out, that's a strong indication that price has broken out of the cloud, came back, retested support, confirmed the support, and followed up. Now, once we broke out of the cloud here on this third candle today, the January 30th, we have our top candle here, and then we pull back. I remember seeing this about 6 hours ago. Price was just on the 170.50 mark. And as soon as it bounced up, I took it as an SR flip. And that's all I need to see for price to give me the green light that this is a technical Kumo breakout. And you would essentially take a long position, maybe at the daily open, maybe even a slightly higher. So maybe you see this just now, right? And you're saying, okay, well, I don't want to chase the green dildo. Where do I get in? Well, you look for support, which is probably previous resistance. So I'm sure I'll dial it in a second. But if you got in or set in bids around the 175, 176 price, and you set your stop below the SR flip, right? Because we want to know when we get into any trade, we want to be invalidated as soon as possible if we're wrong. So a good way to test that is, okay, well, we think we just confirmed the Ichimoku Kumo top at 170.50 as support, which was resistance. So we'd set our stop loss below the Kumo cloud. You can also set it below the Kijun. That might be a little far for a nice risk reward ratio. Point being is you buy previous resistance turn support, which would be around 175, 176. Stop loss goes below the cloud. We know we're going to have this bullish Kumo twist in about 3.5 days. And then you're targeting, well, where am I going to target? I'm a big set and forget kind of guy. So I'm probably going to zoom out a bit and see, well, where's my first real resistance? Well, I see that this was a flat Kijun here. I see there's a nice little flat edge here. So it's probably one of these three tops. And since we're already at this top, I'd probably be shooting for the next top. So 189.55 would be my current target on a daily cloud. This is a 2-to-1 risk reward ratio, pretty solid. But now here's the interesting thing. If we go to the 2-day cloud, what do we see? All of a sudden we see this giant potential edge to edge, right? All the way to 240. Now, just because we see it and we're going to close in the cloud today doesn't mean the setup is active. We have to wait for everything to line up. So we do have the Chiku span above price, which is great, but we don't have the bullish TK cross. And we see here that we're actually not going to get it for the next 5 sessions. So that's 5 sessions times 2 days. That's 10 days. So for at least another week or two, we're not going to get a bullish TK cross. So can price go up in here and drop back out of the cloud? Absolutely. There's no edge to edge. Now, if we're patient, however, and we see that this green dot above the current price action saying that as long as we start making a newer high, the Tenkin is actually not going to follow this path. It's going to go higher. I don't know how higher, but I'm assuming that if we start setting another higher high above whatever this resistance is here, we will get a bullish TK cross. And then the entry, ideally, will be somewhere in the cloud. Now, for me personally, I like to look at flat areas of the cloud. So just the first thing that comes to mind is this 170 area that we just SR flipped, right? So we SR flipped it and broke out from it. Now, what we'd like to see when we come back down is that 170 area to still hold the support. So let's just call it 171, 172, just for clarity's sake. And we're going to be patient. This is what I'm talking about, being patient on the setup. We have a really nice setup right here. You put your stop loss below the cloud. Your entry would be somewhere inside the cloud. And this could probably take a good 2 weeks to even be active. That's another thing to keep in mind. Just because we see an edge to edge doesn't mean it happens immediately. So a really nice setup here is actually getting in the 170 area on a pullback after we probably go to 190, 189, come back to the 170 area, keep it as support. Stop loss goes below the cloud, which is at 150, and we're targeting the opposite edge. That's 240. So we're looking at a 3.3 risk reward ratio trade, 40% upside, about 12% downside. That's the kind of bread and butter trade that I love to leverage up on and then sit in, right? Now that 240 target, that doesn't mean it happens in 2 weeks. It could take a month, it could take 3 months, just like the last edge to edge with Ethereum happened, right? So the interesting part, and I love how we're talking about this now, is this setup right here looks pretty identical to how the 2-day setup looked last time. This is the BitMEX chart, but how it looked last time from 182, from 137 to 282. So there are similarities, and when I see market structure look very similar to how it used to look, I have a high degree of confidence that price may play out the same way. So one very interesting setup to look for, getting into an Ethereum edge to edge in the low 170s, targeting 238s, 240s, and with a stop loss below 150. I think that's going to be a very interesting play if we're going by the narrative, once again, that Bitcoin is going to start moving up, right, and continue this ascent leading into the halving. So that's one setup I think is really interesting to share with you guys. Another one that actually one of our community members and Crypto Insider shared with us yesterday is he noticed this Litecoin SR flip on this Kumo breakout. So you already had the bullish twist, and he pointed it out actually right when price was at the SR flip of the Kumo breakout. And of course, what happened, just 6 hours later, price had a nice little bounce. But these are very clear, clean setups. And that's one of the most beautiful things about Ichimoku is it provides very clear setups, very clear invalidation. But the only caveat is that it's for trending markets. I can't stress that enough. Knowing when to use Ichimoku and when not to use Ichimoku is key, because if you start using Ichimoku in a range-bound market, you're going to be stopped out left and right and not know why. Here's why. You have to use it during a trending market. So that comes back to pattern recognition, knowing what type of market structure we're in, and knowing how to trade that market structure with specific strategies.
Brilliant. All right. So there's already quite a bit to unpack from this. So would you, if say for example, we're looking at Litecoin or we're looking at Ethereum, as you've said a minute ago, and we didn't know anything about it, are you starting on the 2-day and then working your way down the time frames to look for confluence among other time frames?
So I do take it with a top down. I do approach the market, with a top down approach. Usually it would be a weekly, but because basically every single cryptocurrency, maybe besides Litecoin and Bitcoin, don't have a lot of historical information going back at least 3 to 5 years. It's a little premature to take doubled settings on Ethereum for the weekly, for example. You have this huge edge to edge to 750. Is it possible? Sure, but we don't have enough historic information to make it accurate and actionable. So taking a top-down approach, I think starting on the 3-day or the 2-day makes the most sense. I prefer the 2-day just because I have the most amount of confluences there. Once you have the 2-day set up, you start looking at your resistance levels, your support levels. You can literally start marking them out with horizontals and basically start playing the lines level to level. No one says just because you see a 2-day edge to edge that you can't start taking profit earlier or taking profit shorting going down, then buying the dip and going up. There are many ways to approach a market. My strategy and my system, I like to swing big because it requires the least amount of interference on my part. And I find that when I manage trades, as opposed to the setting and forgetting after doing my analysis, my profit and loss statement at the end of the trading session or trading month or quarter is drastically different. I find that I usually am my own worst enemy and I get in my own way when it comes to managing a trade. So once I really take the time to do my analysis, I see an edge to edge, I get in and I sit tight and I basically don't move until I either get stopped out or I hit my target profit. The reason being, it forces me to have the discipline to take setups that I really believe in and believe in enough that if I, got stranded on an island for 3 months, I can go to sleep nicely knowing that, my setup is where it is, my stop is where it is. I'm either going to hit my stop or I'm going to hit my take profit. It's one or the other. There's no in between. Now, some may wonder, well, why are you going to let so much UPNL go away? Well, it's my style of trading that works for me. It forces me to do really good analysis and basically premeditate a trade, plan my trade, right? And then trade my plan. And then just let it play out, because you'll know very quickly, am I even good at analysis? If you're not a good analyst, you're going to be even worse trader. I promise you that. There are plenty of people who are great analysts, but are very terrible traders. And that's because they can't stick to their plan once they start the actual trade process.
And you're trading perpetuals? You're not
Yep.
trading futures or anything like that on BitMEX? So when you're looking for setups like this, are you using exchanges like Coinbase, Bitstamp, etc., to look for setups, or are you looking at the BitMEX charts?
So because BitMEX it's only been around since 2015, I do look at spot exchanges to see the historical price action. It's most often Bitstamp rather than Coinbase, just because for most of the assets it has a longer time period.
Yep.
But yeah, basically looking at spot exchanges to determine the setups, and then I'll calibrate for that via BitMEX, basically.
So when it comes to looking for ideal setups like this, we're looking for bullish Kumo twist. We're looking for Tenkin Kijin crosses, a TK cross, a bullish TK cross, and we're looking for Chiku to break out of the cloud once we've had an edge-to-edge trade like this. Are we using any other types of indicators or tools? Like, for example, I use Ichimoku and Fibonacci very heavily together when I'm probably more so on the smaller time frame, when I'm looking for pullbacks for a position to long, or certainly to exit a short. Are you doing the same thing, or is it purely looking at volume?
The truth is, I only basically solely trade off price action, market structure, and then I overlay Ichimoku. If you don't understand price action or market structure, it'll be very difficult to utilize Ichimoku effectively. The reason being is, if you don't understand different types of market structure, you'll never know if you're in a trending or a range-based environment. So knowing the difference is key, like I mentioned before. But I don't need Fibonacci. The reason being is your Kijun is your dynamic 50 fib. It's the 50% Fibonacci retracement. And most of your indicators that people use, even V-bands, etc., they're all mean reversion strategies, right? So if you know where the mean reversion point is, I find that mean reversions during strong trends, be it up or down, are very high alpha entries or exits, depending on which way you're going. So I don't necessarily need to know the 78.6 retracement for the optimal entry. A lot of times, especially on the lower time frames, you'll get great entries just literally placing your bids and asks on the actual Tenkin line and on the actual Kijun line. The system works so beautifully because, yeah, it gets front run sometimes. Yeah, it blows past a little more, but give or take, more often than not, price respects the Tenkin and Kijun.
Yes.
The beauty that I learned from Chaos Trader is that price always wants to return to the Kijun no matter what. I talked about this in Crypto Insiders yesterday, actually. I don't really use Ichimoku as a system on the 1 hour time frame, but I do leave the Kijun on. And I'm pretty sure it was yesterday when we're, I think, at 9.4 or something, that I said, we haven't had a mean reversion scam wick since we basically flipped 8.2. And lo and behold, we had a mean reversion scam wick. So had you just placed your bids on the Kijun at 91.90 at the time, you would have been in profit. You're still in profit right now. So I find that for using the more indicators you use, the more you clutter your workspace. And if you do add an indicator, you have to know why you're using it. It has to add some sort of value to the trade setup. If it doesn't, omit it, because you can get enough information from price action and market structure alone. And if you're in a trend, well, Ichimoku does really well at capturing 70% of any given trend.
So you can see the divergence there between the Tenkin and the Kijun, and then we have what's called C clamps, and then we have these scam wicks, as you call it here. In order to catch something like that, are you setting a buy potentially below or within the cloud quite a fair bit? Because you can see here we wicked all the way down to 9.
So we did wick in the cloud here. This is actually a great point. I actually did say yesterday 90.50 would have been a great place to leave resting bids. The reason being is when I did share the chart, I believe it was around here where I had a projected, right? The projected Kijun was going to 91.58. But what we did see here, in my opinion, was an order block, demand zone, DBS zone, whatever people like to call it. It's basically this red candle that was resistance turned into support on the way down. So the open of the candle was 90.53, and I believe the wick went to 90.52. So knowing, 90.52. So knowing where your price action order blocks of support or resistance goes very well with Ichimoku. So yes, you would have got a great entry at 91.90, but knowing that this is an order block, this is using price action only, not including Ichimoku, you would have said, great, well, this is an interesting spot I'd like to see turn into support. So you could have kept your bids on the actual cloud, right? But again, I don't really use Ichimoku on a 1 hour time frame. I think the lowest time frame you want to use it on is probably the 4 or 6 hour, because even here we would have caught a nice entry at 9100 on the Tenkin.
Yeah. And I noticed again, you're now on the BitMEX. Would you look at only the smaller time frames on BitMEX just because of the history of what information we have available to us and then macro on the exchanges?
I think you should always chart on the instrument and exchange that you trade. The reason being is there are slight discrepancies, right? So I did actually, chart the ETH USD Coinbase 2-day edge to edge to 282, but BitMEX only went to 281.95. So there were very slight discrepancies, but I'm a real big advocate of charting on the platform that you trade, especially for the lower time frames. Lower time frame being, 1 minute all the way up to 1 day. Above that, that's when you start looking at the spot exchanges, basically.
Yeah, and I've seen you say in a couple of other interviews as well that for myself, I'm certainly a swing trader as well. It took me a little bit to identify that. I don't really enjoy scalping, and when I do use Ichimoku on the very small timeframes, I'm really only looking for TK crosses as a little bit of confluence when I'm scalping, and the rare occasions when I do it. But you have said that for beginner traders, you should definitely stick to the higher time frames. Is that something that you would still advocate for beginner traders? Because we know the smaller time frame we go with Ichimoku, the more noise there is. So we're constantly second guessing ourselves, and we're looking for a million other things that we really probably wouldn't see had we just looked at the macro scheme to obviously identify trend.
So I think a lot of traders are still getting used to watching charts and making decisions as a new session opens or closes. If that's a 1 minute, 10 minute, 1 hour, it's a lot of information to take in. So as a rule of thumb, if you can't trade the higher time frames well, you're probably going to struggle trading the lower time frames well, because not only are there more sessions and more information to kind of disseminate and make ultra fast decisions if you're scalping, but on top of that, a lot of these macro structures play out more slowly, whereas in real time on scalps, they play out much more quickly, obviously. So I think for most traders who are still trying to even get their footing in the space, knowing that you're looking at, just the 4 hour or just the daily gives you more ways to kind of start disseminating information. So it goes back to the idea that as newer traders, we kind of have no clue what we're doing. And the best way to get acclimated is trading higher time frames. So I definitely advocate for that. I think for a time purpose, for life purpose, for whatever else, it's much more efficient and effective to trade higher time frames for most people, because not everyone can sit at home for the next year and a half trading full time and having the time basically to unpack all that information that's going in.
Yeah, and one thing that I really like what you said when I was listening to an interview of you was that your high time frame closes that revolve around major events, whether it be like a daily, a 12 or a 6 hour, give you a little bit, obviously, a bit more information towards the beginning or the middle of the day, and that's where you would look to enter or exit a trade. Is that correct?
Yeah, because it basically gives you a way to create a routine and a system around the markets, right? So you don't want to be a slave to the market. That's the biggest thing. You never want to feel like you have to be in a trade at all times. By separating it into high time frame closes, I prefer the 6 hour just because it's literally, there's 4 parts of the day then. There's 25%, 50%, 75%, and 100%. It gives you 4 quarters of when you can basically break down each session. So the 4 and 6 hour are a great way to kind of get your footing. 4 hours also great because of BitMEX funding. You do tend to see a lot of volatility and opportunity during these funding intervals. So those high time frame closes usually correspond to most of my swing trade entries or exits.
Yeah, I absolutely love that. And you have shown Bitcoin and Ethereum here, and you said you only trade a very small handful of alts. Is that the case really, or are you still mostly just focusing on Bitcoin and ETH?
So it's mostly Bitcoin and Ethereum. Actually, it's mostly Bitcoin, but it's whatever alternative contracts, futures contracts that BitMEX offers, basically. I've been hard pressed to trade spot coins that are illiquid, even to some extent BitMEX alternative coins, just because if I really want to fill a decent sized swing position, I might account for 20 to 50% of the OI, which is just ridiculous. It's tough to exit a position or enter a position at that level. So I think if you can master Bitcoin, you can master all the other asset classes. And it's a real true testament. Like, yes, the other coins may have more, volatile swings in certain points in time, but you have to take into account fees, right? So BitMEX fees on your alternative contracts are at least, I think they're 3 or 4 times as expensive to trade via market versus BitMEX, versus Bitcoin contracts. So it depends if you're a scalper. These fees will add up very quickly for scalpers' P&L. It might not matter for swing traders, but there are definitely certain nuances to consider.
And when it comes to leverage, I think you had said the previous ETH trade that you did, that monster trade, was at 10x. Is that really where you would keep things? Do you ever do cross, or are you just mostly just sticking to 10 and the smaller ones?
I love to say this often, it's leverage is absolutely irrelevant. It doesn't matter, what your leverage is. It all comes down to your position size at the end of the day, which corresponds to your risk. You can't run from risk and position size. Your P&L is a direct correlation to your position size. So leverage in this case, the 10x, was just because my stop was within 9% away from my entry. So because of that, I could have done cross leverage, or I could have left it at 10x. It was irrelevant. It really didn't matter. The only time, and I'm going to be talking about this a lot in the curriculum and with leverage and their use cases, is there's a time to use cross, but you have to do it in a very systematic way where you're using it specifically to layer in a larger positional trade, and you don't necessarily want to blow your load right in the front of a trade, right? So there's multiple parts to a trade. You have the front end and the back end, meaning that, you could be laddering in bids as price goes down and basically over leverage yourself too soon, as opposed to only laddering bids for 30% of your position, letting price bottom, and then as it bounces, that's when you start adding more size as confirmation that your entry is a good entry. So there are many approaches. I really think for newer traders, leverage is so irrelevant. Just leave it at 1x. Don't start increasing your risk arbitrarily unless you know what you're doing.
Yeah, and that was actually one of the notes that I had here from one of your interviews. You said leverage is irrelevant. Leverage doesn't change your trade. Your absolute risk is based on position size. Your position size determines your trade and profitability. The difference between 1,000 at 25 or 1,000 at 10 is the same thing. And I love that. That was a huge lesson for me in one of the interviews that I saw you do. So thank you for that. So are there any other sort of parting tips that you would give for Ichimoku for beginner traders at all? Or is that that's sort of the fundamentals of Ichimoku trading that you would share with a beginner trader?
Yeah, I mean, I think Ichimoku is really nice for newer traders who still don't know what they're doing or what they want to do in terms of the type of traders they are. It gives you very clear, again, setups, invalidations, etc. There are a few handfuls of strategies like the Kumo breakout, the edge to edge, that are basically the bread and butter of what Ichimoku does.
Yeah.
And basically, it's going to come down to chart watching. Sorry to break it to everyone, but there's no holy grail. You're going to need to spend hours and hours and hours just watching price. You can look up these strategies, the Kumo breakout, the edge to edge, etc. But you're going to have to see it play out in real time, right, to get a feel for it. So nothing replicates that. So the fundamentals are what I've basically talked about during the show, but the actual nuances and requirements and little details and ways to actually play it and know if it's not going to play out comes with pure experience, basically, at the end of the day. So nothing replicates that.